copy trade. Copy trade.
Good day to everyone joining us from around the world. Whether you are just waking up, might way through your trading session, or winding down for tonight, welcome. On behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for a global live stream session. My name is Helen, and I will be guiding you through the exciting 2-hour journey at your house. And today, live streams is not just a presentation; it's a conversation. It's a window into engine room of one of the most fast-growing and forward-thinking funny trading firm in the industry. And of course, I'm not here alone. I'm joined with my two remarkable guests who have shaped what WeMasterTrade rebrand today. Skilled trader, mentor, and role model within our community. And first, let me introduce the ever composed always inside. Brian, welcome, Brian.
Thank you, Helen. Hello, everyone, and thank you for spending your time with us. I'm truly looking forward to today's session. There's so much to cover, not just about trading strategies or rules, but all about the full ecosystem that we MetaTrade offer. From how you start, how you grow, to how you earn. This is the kind of the platform that doesn't just fund trades, it builds traders.
Absolutely. And next to him is someone who brings sharp analysis and clarify to every chart and conversation. He's strategist, he's sharp, and he's real for in our trading space. Please welcome Hidden.
Thank you, Helen, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me most about today is that we are going to unpack everything, not just what WeMasterTrade offers, but how traders can truly take advantages of each part of our system, from packages to promotions to scaling and long-term profit sharing. If you have ever had questions or even doubt, today is the day to ask them.
And that's exactly what we're here for. Whether you're brand new to WeMasterTrade or already a part of our funded trader program, today's live stream is going to give you the full picture, not just a highlight reel. Over the course of this session, we want to walk you through what WeMasterTrade truly is, what we believe in, how our programs are designed, and why we're doing things differently from traditional broker or broker firm. And now I want to be clear, this isn't about the style, this is about the understanding. We want you to know what you're signing up for, what kind of structure support your journey, and how you can use that structure not just as success but scout.
And speaking of structure, we will begin by sharing the story behind WeMasterTrade, how we were formed as a funding project, not a broker, which is a very important distinction. Unlike brokers who profit from volume or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profits only when you do well. That is the foundation.
Exactly. And from that philosophy flows everything we offer, especially our trading packages, which we'll be discussing in detail. We explain the logic behind each one, what kind of trader they ever looked at our packages and thought, which one is right for me. Today we'll answer that.
And more than that, we also do a live comparison between packages. We will break down rising account size, maximum drawdown, consistency rule, and even payout side by side to help you make a fully informed decision. It's one thing to see number on the website, it's another thing to understand the intention behind them.
Right, and once you understand the packages, the next question is always, how do I stay compliant while trading? So we will move naturally into discussing trading rules, which honestly is one of the most important parts of today's sessions. We will explain what the daily loss limit is, how it's calculated, why it includes both closed and floating P&L, and how to avoid violating it, especially overnight. We will go into the maximum total loss, the consistency ratio, and we will even address common misunderstandings about trade sizing and risk per trade policies.
And we won't just explain rules in isolation, we explain them in the context of live trading decisions. I'll share some personal example of mistakes I made when I first started trading under funded conditions and how I adjusted, because rules are meant to restrict you. They're here to protect the integrity of your growth.
And so while we're on topic of having your success, we will be guiding you through our current promotion plan, including limited time discount codes, trader support campaigns, capital opportunities, and how to properly qualify and submit proof. We have had some amazing response to our promotions, but also some confusion. So we will be showing you exactly what to do step by step.
From there, we will transition into a discussion on our scale-up plan, which I personally think is one of the most underrated parts of WeMasterTrade offerings. Many people don't realize this, but we have a structural growth pathway in place. If you perform well consistently, you don't just get payouts, you actually unlock higher capital tiers. It's not just about getting funded once, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income at WeMasterTrade is through our profit-sharing model. This is the heart of what makes us different from other prop firms. When you trade on a funded account and generate profit without breaking rules, we share that profit with you up to 90%, but there's more to it than just the percentage. We explain the full payout cycle, threshold, and timelines today.
Now, I know many of you watching today aren't just a trader. You're also the educator, influencer, and of people with large network. That's why we're also taking time to explain our affiliate program, and we will do it transparently. We walk you through how commission are calculated, how affiliate referral are tracked, and more importantly, what you need to qualify for payout, including a detailed explanation of the two referral rule and minimum trading condition.
This is especially important because we want all our partners to feel confident and clear about their earnings. We have seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the terms, and building long-term income streams.
So if you can tell, this is not just a surface level live stream. We are diving into everything: packages, promos, count apart, profit sharing, and affiliate opportunities. Always one purpose in mind: helping you make a more informed, empowered, and confident decision possible.
And we want this to be interactive, not just informative. So if you have questions at any point, please drop it in the chat. Our moderators are watching, and we'll answer as many questions live as we can. Your voice matters.
And if you are watching this on replay, don't worry, we will leave the timestamps and summarize below, and you can always reach out to our team with any follow-up inquiries. Our support team is incredible, and they are really care about helping traders succeed.
To wrap up the welcome, I'd like to say this: WeMasterTrade is not just a platform, it's a commitment to build real traders, to create fair structure and scalable pathway for people around the world who are serious about trading as a professional, not a game. So if you're here to grow, to understand, and to take action, you're exactly where you need to be. Let's dive into the journey together. Let's begin. Once again, welcome to the WeMasterTrade live stream. Thank you one for being with us today. Now, before we dive into packages, trading rule, and promotional mechanics, we wanted to make a moment to zoom out and offer you to the full picture of who WeMasterTrade really is, what we believe in, and why we build this platform. That's why we have. Because when you're putting your trust in your trading into the company, understanding it fluffy isn't just helpful, it's essential. And so the next segment is about origin, intention, and impact. It's about how WeMasterTrade began, what values underpin the firm, and how the values translate into real tool and outcome for traders like you. And to walk through that, I'm trust as always with two people who realize and break their principle, Hidden and Brian. Let's start at the beginning.
Thanks, Helen. To truly understand WeMasterTrade, you need to understand why it was created. Unlike many prop firms or brokers that evolved from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give capable traders access to capital, regardless of their background, location, or financial situations. We were founded in 2002 as part of the WeMasterTrade Group, headquartered in Vancouver, Canada. Why WeMasterTrade built its name on signal sharing, investor network, and copy trading tech. WeMasterTrade was designed to serve a more focused vision to identify, support, and scale high potential traders, giving them a pathway to earn professionally without risking their own savings.
And it's important to note, WeMasterTrade is not a broker. That's not just a label, that's the fundamental difference. We don't profit from spreads or commissions. Our success is directly tied to the success of our traders. That's why everything we have built, from our instant funding packages to our profit sharing model, is structured with alignment in mind. We take on the capital risk, we give you the roadmap, you bring the skills. But we also know that skills alone isn't enough, which is why one of our founding principle is education first. We don't want traders to blindly follow rules. We want them to understand the logic behind the structure. That's why we have invested heavily into the WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
And that academy is something special with courses ranging from introductory trading psychology all the way to advanced risk calibration and multi-asset strategy design. The Women to Trade Academy isn't just the theory, it's about implementation. We have designed a curriculum to match the real-world trading environment within Women to Trade. So what you learn, you can apply directly to your funding.
We copy.
So certification. We confirm that our educational product and trader development program meets rigorous international standards for qualifies, quality, structure, and learner engagement.
That certification is a big deal because it shows our long-term commitment to developing traders, not just collecting fees. In an industry where many so-called prop firms come and go, WeMasterTrade has positioned itself with real operational stability, compliance framework, and internal accountability. We're not here for a season. We are here to help build careers.
And we have seen that commitment translate into real stories. If you visit our testimonial pages, you will find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa, all talking about how WeMasterTrade helped them not just earn more but trade with purpose. They talk about passing challenges after years of struggling with retail brokers. They talk about finally being able to trade without the emotional burden of risking personal funds. We have had students become full-time traders. We have had women re-enter the finance world after career breaks. And we have had young professionals from underbanked regions in finally access the markets with a funded account. That's the impact and that's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, we maintain a regularly updated blog session where our team of experts and educators share quickly insight, trading psychology breakdown, market reaction, and platform updates. We believe that learning never ends and we keep our trader informed. But let's also talk about the culture. What makes WeMasterTrade different isn't just the product offering, it's the community mindset. We actually promote trader integrity, respectful competition, and knowledge sharing. Whether you are in the Telegram group, watching our YouTube series, and engaging with our online support, you will see that actually listen.
And I'll speak honestly here. In many platforms, the trader is just a customer. At WeMasterTrade, the trader is the product. Your performance drives the business. Your voice shapes the platform, and your consistency determines how far we can scale together. As mutual accountability is rare, and it's something we're proud of.
And if you have ever doubted whether this path is real, whether a trading career is truly within reach, I encourage you to read about the testimonials, take a look at other funded accounts, and connect with people who have gone through the system. The stories are real, the capital is real, the results speak for themselves.
And to summarize, WeMasterTrade is a capital allocator, a talent accelerator, and an education for trading institution. We are here to challenge the status of trading assets, to build systems that reward performance over promotion, and to create real, scalable income opportunities for traders around the world, regardless of their starting point. This is more than a broad firm. It's a trading movement, and if you're ready to pass it, today LiveStream will show you everything you need to know. And thank you, Hidden and Ryan, for that deep and honest walkthrough. Coming up next, we're going to take the foundation and connect it directly to our actual offering. That means we will be discussing all the different account packages available as WeMasterTrade, how they differ, who they are designed for, and what kind of result you can pass from this. Okay, trader, now that's we explore who WeMasterTrade is and the principle we stand for. It's time to move into the one of the most essential part of this live stream, and in that discussion on account packages. This is where it's all begin for most traders, choosing the structure that aligns with their goal, their story, and their current skill level. And when you say packages, you are not just talking about dollar figures. We're talking about a framework. A package at WeMasterTrade represents a different pathway towards growth, and today we will walk you through all of them, what they offer, how they structure, and more importantly, who they are designed for.
Exactly, Helen. At WeMasterTrade, we don't believe in a one-size-fits-all model. That's why we built two distinct product lines for traders, the challenge package and the instant funding package. Each line includes a variety of account size and configurations because we know that trader comes with different strength, risk appetite, and timelines.
Let's begin with the challenges model, a two-phase evaluation system built for traders who want to prove their skills before being allocated capital. It's structured, fair, and has become the most popular route for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin with a simulated account and your goal is to meet specific profit targets while staying within strict but reasonable risk parameters. There are 3 stages in total, phase 1, phase 2, and then the funded stage.
And take for instance our 10,000 challenge, a great starting point for traders who want to minimize upfront score while building a trade record. Let's break it down phase by phase.
In phase 1, you need to achieve an 8% profit target, which is $800 without reaching a 5% daily loss of $500 or a 10% overall loss limit, $1,000. You have unlimited time to achieve this. That's a key difference from many prop firms. We don't pressure you with deadlines.
Once you pass phase 1, you will move to phase 2, where your profit target drops to 6%, that's $600. The risk will remain the same, and here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed the target.
Finally, once both phases are clear, you enter the funded account, where you trade with real capital, have no profit target, and your profit share jumps to 90%. That's one of the highest in the industry.
This account is ideal for newer traders or experienced traders who want to start with lower pressure and learn the system. If you are still refining your strategy or want to get a feel for WeMasterTrade risk framework before scaling, this is the perfect packages to begin with.
And now for those who are confident in their strategy and want to start with a larger account size, we offer 25,000, 50,000 and 100,000 challenge packages. The structure is similar to Faceit and the same 5% day lot and 10% total lot limits, but with target scale, profit promotionally.
For example, in the $50,000 challenge, you need to hit $4,000 in phase 1 and $3,000 in phase 2. While the targets are higher, the leverage remains the same, 1 to 100, giving you room to adjust position sizing.
The $25K to $100K challenges are ideal for traders with more capital management experiences, especially those looking to eventually scale into larger funded accounts. If you have already passed all the challenges or have a strong verified trading history, this is a good step up.
Every challenge package comes with a one-time fee. For example, just for $45 for the 10,000 challenge. The fee is refundable once you become funded and meet the minimum performance conditions. And if it don't go your way, you are eligible for 30% reset discount to start fresh. What if you don't want to go through a challenge at all, but instead want to accept real capital immediately and get parts where purely on result? That's where our instant funded packages come into play.
And this is where WeMasterTrade truly set itself apart. Our instant funding model is designed to give experienced, disciplined traders the chance to trade real capital from day one. No evaluations, no demonstrations, just pure live trading backed by a structured, fair, and transparent system.
And what makes it even more accessible is that you can choose from several different account types depending on your style, preferences, and goals. Today, we're going to walk you through each of the 5 main instant funding packages: Standard, 51010, 510 510 OPC, and Customized. We'll compare the details, but more importantly, we help you figure out which package is right for you.
And let me set that thing quickly. All our instant funded packages give you live trading asset from day one. This means no challenge phase, no evaluation. You can pace one, follow the rule, and you're trading like capital. And every account, no matter the size, includes no time limits up to 90% profit shares. Scale up plan up to 1 million. Support for EAs, swing trades, capping, and even SFT. And now let's go to package by package. And as usual, Brian Hidden, I want to chime in a real advice. Who should actually choose which one and what kind of trader you think success with it?
Okay, let's start with the standard package. I always describe this as one of the best plans for traders who just want stability. You're getting up to $200,000 in capital with a very manageable 4% daily loss limit and 6% overall limit.
It's like that calm, steady account that doesn't push you to overtrade. And with the profit split up to 90%, there's serious earning potentials even if you are taking a slow and steady approach.
And how about the commission?
Competitive across the board. Forex at $4 per lot, gold at $4 per lot, indices at $0.5 per lot, and stocks at just $0.07 per lot.
And everything is allowed. News trading, scalping, weekend holdings, EIs, HFT, you name it.
So for the audience, if you're someone who traded rarely, understand your strategy and want to full run asset, and plan to play long game, this is your sweet spot.
It's perfect for intermediate to advanced traders who already know the edge but don't want to trade with target-based challenges. And if you have ever had an account blow due to unrealistic rules, You will find the standard model refreshingly frank.
I'd also say it suits swing traders. The 4-6% risk profile just gives you enough flexibility to hold multi-days positions, especially with weekend holding fully allowed.
Alright, moving up a gear, let's talk about the 510 pockets. Same capital ceiling up to the 200,000, but now you get a 5% daily loss and while 10% overall loss limits. Why that the
The execution is massive for traders who scale into positions or take multiple entries per setup. You have got more room to breathe, especially in high volatility markets.
And the profit target here is also 10%, which aligns well with the risk window. Plus, you still get full support for scalping. EA's news trading is very trader friendly.
This best for day traders, especially those trading assets like NASDAQ or gold that move fast. If you have got a tested intraday strategy and just need some risk breathing room, these are your packages.
And also for traders who want structure but don't mind having the profit target, the clear milestone motivates some people, especially if they are buyout oriented.
And now here a personal favorite, the 510 euro. You get a 5% daily loss and 10% overall loss, but no profit target, none zero.
And that's a blessing for a high precision trader. You're no longer chasing a number. You just focus on protecting equity and growing capital slowly and safely.
This one is loved by low frequency traders and snipers. If you enter 3 to 5 trades a week, this is your space. You are not penalized for patience, you are actually rewarded for it.
So who's it for? Veterans, swing traders, risk conscious trader, people who prioritize consistency over speed. If that's you, you're right there.
And let's be honest, not everyone wants to hit targets. Some just want to trade well and scale up cleanly this day home.
And now for the rule breaker, or rather those who don't want to evaluate us on how even their profits are. The 510 no BC remove profit consistency tracking, right?
Exactly, same 510 risk profile, but you are not required to keep your profit growth smooth.
That said, trade copiers are not allowed here in this one, so it's for manual traders only, and you need to trade responsibly. But for aggressive traders who sometimes hit big spikes, this is the play.
Perfect for high-risk reward traders or anyone who's had issues with consistency rules at other firms. You trade what you want, just keep it inside the drawdown box.
And last but not least, the customized packet. Today we made the trade saying, you know what you need, let's build it together.
You can adjust daily loss, overall loss to your liking, plus you can fund up to $400,000 more than any other account.
It's premium, flexible, and come with all trading style allowed, including EIs, new trading, weekend holding, HFT, and more. Top-tier professionals, hedge fund traders, signal providers, high-volume traders, anyone with a specific structure in mind, these packages let you build it.
I always say if you try all the models and nothing quite fits, build your own blueprint with customize. That freedom is rare.
And to sum up, every instant funded package we offer come with clear risk parameter, fair commission, deep market asset, and real profit potential. There are no time limits and payouts start as early as 1 day.
And no matter your strategies, scalping, swing, algo, or manual, there's an account that aligns with you. The key is picking the right one now so you can start building consistency from the start.
And if you are ever unsure, our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your dreams. The right fit always outperforms the biggest promise.
And up next, we will walk you through exactly how to protect your account, avoid breaches, and understand the key risk and consistency rule that power our entire platform. Okay, alright trader, now that you have seen the packages, let's talk about the part that's either make or break your account. That's right, it's time to dig into the trading rule and how to actually stay compliant when you're funded. Because let's be honest, getting fun is exciting, but staying with fun, that's the way the game really begins. And the number one reason traders lose their account is come down to one thing, the daily loss limit.
The dreaded daily loss is the one rule traders think they understand until it kicks them out of their account at 3:17 p.m. on a random Tuesday.
But here's the good news. Once you understand how it works, really works, it becomes one of your best tools for risk control. So today, let's break it down from top to bottom.
And so, what is daily loss limit, also called maximum daily loss?
It's the maximum amount of loss you're allowed to incur in both floating and closed trades on any single trading day. If your equity falls below that limit, even for a moment, your account is automatically closed.
And the key thing here is the daily loss is calculated from the higher of either your balances or your equity at the start of the trading days. That's a really important distinction, and that's what trips a lot of people up.
Let's work through a live sample. Imagine it's the start of day 5. Your balance is 105,000. Your equity, however, is higher 107,000 because of the floating profit.
If you're on a 4% daily loss limit, we calculate off the higher number, so $107,000.
So for percentage of $107,000 is around $4,000. That means your equity for the rest of that day can drop below $102,000, or boom, your account is gone.
Alright, and I think it's important to point this out. The system isn't waiting for a close at the real time. Even if your trade is floating a lot and you haven't closed it yet, if your equity dip below that threshold for even a second, that's it.
Now let's reverse this. Say it's the start of day 7, your balance is $100,000, but your equity is $99,000 because your open trades are slightly in loss.
Since balance is higher, we base the 4% on the initial balance, so $4,000.
So now your equity must stay about 96,000 throughout the day. If it drops to the 95,999 until liquidation kicks in, no warning, no margin call.
The system will send a market order to close all trades. Everything liquidates. Your account is disabled and you can trade again unless you purchase a new packages.
And here's the kicker. The auto close happens when the system detects the threshold were crossed. But due to market fluctuations, your final profit and loss might look worse than the actual threshold. That's because the system executes a closure based on the price slippage at the time of liquidation.
So even if you only intended to take a 3,900 slots, one slippage break in gold or NASDAQ, and suddenly it's 4,200. That's why you're saying don't write the ad.
Alright, let's talk about how to avoid violating this rule, because this is where the pro mindset kicks in.
First step, know your buffer. Never plan trades to take you right up to the edge of your limit. Leave at least 10 to 15% room below the max loss, especially in volatile markets.
Tip 2, take your equity, not just your balance. I can't stress this enough. Most traders stare at their balances all day, but if your floating loss is dragging your equity, you are heading toward a violations.
Tip 3. Euro dashboard or trigger. Inside WeMasterTrade, we provide rich dashboard that show your loss status. You don't check them, don't rely on memory.
Also, pause trading after a big loss early in the day. If you lost 3% in the first hour of London session, maybe it's time to stop and reflect, not try to revenge trade your way back up.
Another big one, trade smaller during news hours. If you are trading gold or during NFP with full loss sign, you are particularly begging to break the daily loss rule, cut position size, and ride post volatility.
And so what are the top broken mistakes you see when it comes to daily loss?
Number one, over leveraging. Traders opening position that are 5, 6, 7% of their account thinking they close quickly, but if the trades turn red fast, it's already too late.
Number two, holding overnight without checking exposure. If you hold 3 trades overnight and wake up to a 60 pip gap, the daily loss could be hit before you even open your eyes.
And the third, assuming that closures are all that matter, they are not. Remember, equity includes both loading and close position. The total equity lies in your score.
So I always say this to new traders, the daily loss rule isn't your enemy, it's your account's airbag. It's designed to protect you from doing something irreversible.
Exactly, it forces discipline. You can be aggressive, but only within a box. And if you learn to trade inside that box, you will last longer than 90% of the market.
And one last note, this isn't just about rule, it's about trust. We want to trust from you because we trust that you will manage risk responsibly. The daily loss is there to protect that trust on both sides. And we will explore the next rule after have a short break.
We copy trade. We copy trade. We copy trade. Copy trade. copy trade. Copy trade.
Welcome back, trader. In the previous segment, we covered the day last rule, and if you haven't already clicked that one, you're missing out. But now we move from the daily boundary, the absolute boundary. I'm talking about the maximum loss rule, also known as your account stop loss, the line that can be crossed, not just for the day, but for the entire line of your account.
And this is where a lot of traders misunderstand how the rules work. They think, well, I didn't hit my daily limit, so I'm fine. But then a week later, they've chipped away at their account and suddenly liquidation.
The max loss rule is the last safety net. If the daily loss is your daily seat belt, then mark loss is your airbag. If that limit is hit, it means that the account is deemed unsalvageable under your current trajectory and is closed immediately.
And so what exactly is the mark loss rule? Let's define it simply. It's the total maximum amount you're allowed to lose across all trades for the entire account. If your equity does it, your real-time capital including open trades ever drop below a certain percentage of your starting balance, your account is gone, period.
And unlike daily loss, which resets every day, this one doesn't reset. It's cumulative. You can lose 2% one day, 3% the next day, and if your total crosses the line, that's it.
And the percentage limit depends on your packages. It's typically either 6% or 10% of your initial balance, not your equity, not your profit, but the original number you started with.
Let's walk through a concept example. Suppose you have an instant funding account with an initial balance about 50,000 and your mark loss limit is 6%, which is 3,000.
That means your equity can never go below $47,000 ever. Doesn't matter if you made $1,000 yesterday, the total loss from your highest point back down to that threshold is what matters.
And remember, this rule includes both closed losses and floating losses. So if you have lost $2,000 in closed trades and you have another $1,200 floating in red, your equity is now at $46,800. That's below the limit account close.
And just to be clear, it's not about the net gain or loss across trades. It's about the way your equity stands in real time relative to that dollar floor.
And when you're in profit, here's what it gets interesting and a little tricky. Let's say your account grew to $51,000. Congrats, you're in profit.
But your max loss limit is still based on your original $50,000 starting balances. So if your limit is 6%, the threshold is still $47,000. What changes is how much room you have to fall before you hit it.
Exactly. You now have a 4,000 in total buffer because 51,000 minus 47,000 equals 4,000. So if your profit give you cushion, but the flow never move.
Once your equity drops below that maximum loss threshold, even by a few dollars, auto liquidation triggers. All trades are closed immediately at market price.
And again, like with the daily loss, if there's volatility or slippage, your account might close out below that line. That's just execution reality.
And more importantly, once it's breached, that account is permanently disabled. You will need to purchase a new packet if you want to continue trading. No reset, no rollback.
Alright, let's get tactical. How do you actually trade inside this rule without constantly worrying about it?
First, track your total closed losses every day. You should always know how close you are to your max loss floor. Don't wait for the dashboard warning. Calculate it manually.
Second, use your profit as protections, not permissions. Don't treat floating profit as a green light to increase risk. Instead, consider looking in gains by reducing loss size when you are ahead.
And third, manage your voting loss aggressively. Even if you're positive overall, a single trade with a poor stop placement can take you from the city to shutdown in a few minutes.
And fourth, stay cool when you're closed. If you are down 5% out of your 6% limit, that is not the time to double down. That's the time to step away, pause, and rethink your entries.
The biggest mistake, underestimating floating drawdown. Traders close 3 losers and think, okay, I have still got room, but they forget about the float trade floating minus $1,800.
Second, traders who chase recovery after a bad day. They lose 4% in one day, come back swinging the next day thinking they'll make it back, and instead take another 2% and boom, violation.
The third, and this one hurt, ignoring sleep during major news. Even with a tight stop, new candle can scam you straight through your limit.
And the max loss rule is there for a reason. It's not there to punish you, it's there to protect you from yourself. Every successful trader I know sees their stop loss, whether personal or institutional, as a non-negotiable boundary.
Right, it's a reality check. If you are consistently brushing up against your mark loss, the problem isn't the rule. The problem is your system or your psychology.
And as WeMasterTrade, we are not just giving capital, we are teaching structure, and the mark loss rule is a separate program from professional. So remember, your mark loss is a percent of your starting balance, typical 6% or 10%. It's calculated using a pretty not balance. It includes both closed and floating losses. And one breach, your account is gone. And coming up next, we will explore the consistency rule and why steady profits matter more than big spike when it comes to growing, scalping, and getting paid.
You have ever made $5,000 in one day, then made $200 in the next 4 days, and wonder why your payout got flat? This next segment is for you.
Let's dive into the rhythm of profitability and how to stay consistent under the WeMasterTrade model.
Now, alright, trader, we have talked about the daily loss limit, so we have just covered the maximum loss rule to pillar of protecting your capital. But now it's time to shift gear just a little and not talk about risk, but about the result. Now, here's the thing. It's not just about us staying alive in the game. As WeMasterTrade, we want to see traders grow, scale, and actually earn. And to do that, we need more than just a winning day. You need something called profit consistency.
This rule right here, the profit consistency rule, is what separates a lucky spy from a reliable trader. It tells us whether you can make money over time or if you're just hopping to hit one big winner and roll the dice.
And more importantly, it's also how we evaluate if a trader is eligible for withdrawals, profit sharing, and even scale up. So if you are funded and you are wondering why your payout didn't go through, this rule could be the reason.
So let's define it clearly. The profit consistency ratio is a measure of how even your profits are from day to day. The more balanced your profit, the lower your ratio. The less consistent, meaning you have one giant profit day and then smaller and losing day, the higher your ratio.
The idea is simple. If 80% of your total profit came from one day, that's not consistency, that's luck or risk. What we want to see is traders who make profit day after day, even if it's small. That's what we can scale.
The formula is really straightforward. Take your best trading day's profit and divide it by your overall profit since you started the account, then multiply by 100.
And the bad day divide total profits multiply 100 equal to profit consistency percentage.
And just to be clear, best day refers to your highest close profit in a single calendar day, and total profit is the sum of all your close profit minus any closed losses or open losses across the life of your account.
Let's say you have had the following results over 5 trading days. Day 1 plus $100, day 2 plus $200, day 3 minus $50, day 4 plus $100, day 5 plus $60.
And that means your total net profit across 5 days is $100 plus $200 minus 50 plus 100 plus 60 equals to $410.
And your bad days were day 2, that's over 200 profit.
So now we apply the formula. $200 divided $410 equals 0.4878. Multiply that by 100 and you get a profit consistency ratio of 48.78%.
Now, let's say your account requires 20% profit consistency. This is common. This trader is way above that, so they wouldn't qualify for a payout yet.
So even a two-day trader is profitable. They are not consistent enough. They has one big day that make us almost half of their total profits. And that's not sustainable, and that's what we're looking at.
And this is where I really want to speak to traders. If you're relying on one or two big days to carry your entire account, that's not professional trading. That's volatility. You can get lucky, but you won't stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluates your consistency over time. Traders who show long-term balance are the ones who get scale up, not who get features, who get trust with more capital.
Alright, so let's average a number. What an acceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your best day should not exceed 20% of your overall profit. Let's say you are over the limit. Don't panic. You are not disqualified. You just need to keep trading and even out the curve.
Here's how to do that. First, trade smaller size for a few days, then take smaller and control wins, and for like $200 or $300 days, avoid big wing trade that could spike your ratio again, and then spread profit across multiple days, not one monster setup.
And for those using EAs, monitor your equity curve. If your EA is growing profit heavily into one day, you might need to rebalance it. The portion might be profitable, but it's won't pass this rule unless it's figured with payout logic in mind.
Mistake 1. Traders hitting target early, then taking the rest of the week off. That inflates your best day and leaves the rest of your curve flat.
Mistake number 2, overtrading after a big day, thinking I'm safe now and trying to squeeze more instead of averaging out that high ratio.
Mistake 3, thinking this rule is just a rule. It's not. It's a reflection of what we actually look for our master trader.
And at the end of the day, this isn't about controlling you. It's about building habits that can handle scale. If you can't be consistent with like $25,000, what happens when we give you a $100,000 account or more?
Exactly, consistency is what makes you safe to invest in. At WeMasterTrade, we fund traders, but we also study them. This rule tells us whether you are serious about long-term trading.
And we haven't seen it's like it time and time again. The trader who respect the rule, they are the one who gets multiple payout, referral, and grow into six-figure funding accounts.
So don't fear the rule, understand it. Use it as a feedback tool. If your ratio is too high, great. That means you haven't got profit. Now keep going, balance it out.
And remember, you don't need to calculate it manually. WeMasterTrade dashboard calculates your profit consistency ratio automatically. You can check it anytime under your statistic tab.
To recap, this rule is about the balance, not volume. Aim to keep your bad day under 20% of your total profit. Spread your wins across multiple sessions and monitor your progress in the dashboard. We will talk through the daily loss limit, talk the maximum loss, account loss, and examine how your profit consistency shape your long-term payout and growth. And now we'll write the final and to have more overlook rule of or the risk consistency rule.
The risk consistency rules are what we call the discipline test. That's right, traders often think the biggest enemy is the market, but truthfully it's inconsistent, especially in how much you're risking from one trade to the next.
This rule doesn't look at how often you win. It looks at how stable your risk is and how professionally you are managing your position sizings. And if you are serious about scaling at WeMasterTrade, this rule is non-negotiable.
And let's break it down. At its core, the reconsistency rule is simple. You are not allowed to risk more than 2% of your initial balance or any single trade idea.
And that includes all losses associated with that trade idea, both closed losses and floating losses. Even fees, commissions, and swap are counted.
And for some accounts, like the 510 OPC packages, this rule gets even stricter. There, the limit is 1% per trade idea, not 2%.
And so why does this matter? Because consistency isn't just about the outcome, it's about the process. The more erratic your position sizing is, the more volatile your equity curves become, and that's make you hard to scale.
This rule protects both you and the firm. It helps preserve capital, prevent large equity swings, and makes sure your edge plays out over time.
Think of it as your account hit bit. If your account size pulls up and down 0.5 loss one day, 5 loss in the next, the system flags it. That's not structural, that's chaos.
This is where it's technical, but stay with us. The term trade ID is not just one order, it's a group of trades that share the same logic.
If you open free buy position on XAU USD or gold at different times, that's one trade idea.
Because it's the same symbol, same direction, and close around the same times. Even if you open them at different times, they are seen as a single unified positions from the risk perspective.
So the system doesn't look at your trade in isolation, it's grouped them into a logical bundle and apply to the 2% rule across the entire bundle.
So what's allowed? You can have multiple separate trade ideas as long as each one respects the risk limit.
For example, if you go long on gold, short on GBP, GPY, and short on AUD USD, and each position has its own distinct direction and asset. Those are three separate trade ideas, and each one can reach up to 2%.
And one not allowed. Let's say you go buy on gold and then you go buy again and again. You now have a 3 open position in the same direction on the same asset.
Yeah, the system treats that as one trade idea. So if the combined floating risk or eventual loss from those positions exceeds 2% of your starting balance, boom, you have broken the rule.
And let's go hands-on. Suppose you have a 100,000 account. The 2% of market risk per trade means you can slow more than 2,000 on any trade idea total.
So you open two gold buys, one lot each. You don't place a stop loss. News hits, market drops 100 bips. Each lot losses $1,000, and that's $2,000 in total.
You are right on the line. If slippage or swap adds a few extra dollars, that is rule broken, account flagged or liquidated depending on enforcement model.
And on some accounts, especially in some funding account with a stricter tolerance, this breach may result in a lot of funding status or immediate closure.
Tip 1. Set your loss size based on account risk, not emotion. Know how many pips equal 2%.
Tip number 2, use stop loss orders religiously. Set them based on risk per trade idea, not random chart level.
Tip 3. Don't start trade without calculating combined risk. Just because one position is below 2% doesn't mean trade up the mark.
Tip 4. Label your trade ideas mentally. If you are entering on the same setup, treat it as one, size it accordingly.
Tip 5, if you want to split an idea into multiple entries, do it smart. Scale in smaller. Use micro loss if needed. Keep the total exposure below 2%.
The most common reason traders break the rule, stacking multiple entries on one trade idea thinking it's still separate.
And second, opening high risk trades after wins. assuming they are playing with house money. Spoiler, the market doesn't care.
And the third, neglecting a floating loss. A trade may be not closed, but the floating rate still counts toward your 2% rate.
And why we enforce this rule? This isn't just policy, this is professional practice. Hedge funds follow this, banks follow this, real traders follow this.
Exactly. We are not here to micromanage you. We are here to protect your account, our capital, and the integrity of this community.
And traders who internalize this rule, who understand that more consistent risk is the foundation of scalable capital, though at the 1 week row, although at the trader who will go from 25,000 to 1 million.
So if you want to be a professional trader, you have to think like one. And professional traders always know how much they are risking on every trade every day.
And you are still guessing your loss side or opening trades because the setup feels right. Take this at your side, step it up, get structured.
And this is more than the rule, it's a habit. Build it now, and the path to bigger capital and larger payout become way more predictable. And that's my friend. What's up to the 4 essential rules of trading as WeMasterTrade? The daily loss, maximum loss, profit consistency, and risk consistency matter days. And you are not just staying compliant, you're building a foundation for serious capital management, long-term payout, and scaling. Trader. Coming up, we will move to the highlight economic news of the week.
Good morning, everyone. Welcome back. Today is Tuesday, November 4, and we have several high-impact events. A cluster of RBI release for AUD this morning, BOC comments for CID, and 2 ECB speeches from largest later in the day. We will break the sessions into 2 perspectives: short-term scalping opportunities and medium-term swing positioning. I'm a trader hidden, and I will cover the scalper playbooks. Over to trader Brand for swing view.
Hi everyone. I'll focus how the RBA tone and Lagarde's speeches shape the next few days' directional bias and where swing trader can set entry, stops, and targets. So, quick macro note: the cash rate is forecast to be unchanged at 3.6%. When a central bank leaves the rate unchanged, markets focus on the statement and press conference for clues, growth versus inflation priority, language around further tightening, and forward guidance. A subtle hawkish and dovish tone can create multi-section trends. Also keep in mind liquidity volatility is concentrated around releases and often widen spreads.
For scalpers, that means fast, tradable moves, but also risk from widened spreads and fake outs. We will discuss precise entry rules and motivations.
Okay, maximum comment can move CAD pairs, especially CAD, JPY, and USD CAD, unless he signal a material change to the policy outlook. Expect short-lived move. For swing traders, use this as a sentiment check, but don't change big position based on a single speech unless it's outer policy outlook.
Scalpers, watch the first 10 minutes of directional convictions. Traditionally, if price breaks recent 5 to 15 minutes structure with volume and clear momentum.
RBA cash rate, monetary policy statement, rest statement 10:30 a.m. GMT, and RBA press conference at 11:30 a.m. This is demand event since the rate is expected unchanged and the statement told and subsequent press conference are the catalyst. Key questions to listen for: is the RBA emphasizing inflation persistent, hawkish, or growth softness risk, dovish? Any mention of labor market or global conditions that would change hiking or Boltzmann calculus? For swing traders, the day after the RBA, you should be able to form a bias, hawkish to AUD strength, dovish to AUD weakness, place trades only after seeing follow through on higher time frame 1 hour to 4 hours.
Scalpers plans like this: pre-news, mark reason 50 minutes high and low, or low, 1 hour key levels and sessions order blocks. Executions wait for the initial 30 to 90 seconds for the markets to spit out directions. If price chops with no convictions, stay up. Entry type: momentum breakout or retest or breakout safer. Example: price spikes 15 to 25 pips above pre-news high and retest. Enter on retest with a tight stop. Targets and stops: aim for 10 to 25 pips on measures. Set stop to equal or slightly larger than target. RR will be 1 or 2 depending on setup. Reduce position size if spreads widen. Avoid placing large orders right at the release and trying to catch the top.
ECB President Lagarde speaks at 2:40 p.m. and 5 p.m. GMT. So Lagarde's speeches are the next day shaper for euros. She may provide hints about the ECB's views on inflation and policy path. For swing trader, Lagarde's tone can confirm or reverse the bias created by the RBA. Cross-currency flows matter.
Scalpers should treat each speech like a mini event. The same rules apply. Wait for confirmations and trade momentum. The EUR/USD often has clear single direction moves after ECB commentary.
AUD/USD immediate ideas for swing traders. Bullish scenario: hawkish RBA. Look for daily 4-hour structure. If price break above the morning resistance and form a higher low on the 4 hours, consider adding long position on pullbacks. Entry zone retest or breakout on 50 minutes to 1 hours. Stop below the recent swings low on 4 hours. Target next structural resistance on daily. Bearish scenario: dovish RBA. If the RBA signal low slow down, look for a clean break and close below the 1 hour support. Enter short on retest, stop above the 1 hour high. Target next daily support.
Intraday must the 15 M range. If the release produce a spike, trade the retest with 0.5 to 1% account risk per trade. Scale to pip target. Examples: risk sizings for a 20 pip stop, reduce loss to much risk through.
AUD JBY volatility play. AUD JBY often exaggerated AUD moves. For swing traders, use it to amplify conviction, but be mindful of JBY-centric flows, safe haven bids.
Scalper expect larger pip moves, widen your stop proportionally and avoid over leverage.
Okay, thank you so much, Hidden and Ryan. Thank you so much to all amazing viewers who joined our live stream today. We truly appreciate your time and support. We hope this live session had helped you gain the better understanding of our company, our trading rule, and exciting promotion we currently offering. Well, your genuine question mean a lot to us, and we are always happy to connect and share more useful information with our trading community. Stay tuned for our next live stream. We can't wait to see you again and bring you even more helpful update and insight. And happy trading!